Good morning, everyone. I'm Anthony Crudele, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using CME Group event contracts to trade equity indexes, metals, energy, and Bitcoin. In today's show, I will show you how I am using Bollinger Bands along with my 3-minute opening range and an anchored VWAP to determine which scenarios and strikes I use to trade CME Group's event contracts. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading CME Group's event contracts. And they now have it on their regular platform in an options change, and you can trade it right there in the dome. That's the depth of market. Some people call it the DOM. I'm not going to say who, which I will be showcasing that in today's show. I want to hear from all of you, so please take a moment and drop me a message in the chat because I want to be able to engage with you throughout today's discussion. I'm going to be focusing on mostly gold, oil, and the S&P. The only trade I have going on right now is in the S&P, and so we'll talk about that and why I took it. First thing I want to do today actually is I want to pull up the CME Group's FedWatch tool. Why? Well, I look at this all the time. We just got out of a time where the Fed raised rates, right? I mean, unless you were in a bunker somewhere and you didn't know, the Fed just raised rates by a quarter basis point. And I went to the CME Group to the FedWatch tool, and I was looking at it, and I'm going, okay, what's going to be happening here over the course of the next several months? And if you look at June, right now it's saying unchanged 95.6%. July is already saying that there's a higher probability of a 25 basis point cut in July. We just raised 25 basis points. So in July, it's saying 25 basis point cut, higher probability. It's saying by September, because we don't have one in August, you're going to be, if they don't do it in July, we will be at 475 to 500. So 25 basis point cut by then. And then November, it's saying we're going to be at 50 to 75 basis points cut. And then in December, it's saying we're going to be 100 basis point cuts. We just get out of the cycle of raising rates. And you heard the Fed yesterday. Some people will say, they're pausing. This doesn't look like pausing to me. This looks like they're reversing. We will see. But this is just something really to keep an eye on here. It's just extremely important. And so I just wanted to kind of point that out and let everyone go and check that out. And next thing I'm actually going to go to, before I go to that, let's go to the, there I am. Let's go to the quant stats. Today we gapped down, and I talk about these quant stats all the time because these are the non-bias stats that we have at PYT, and we're actually going to have a lot more stuff coming in the coming days. So be sure to go and check this out. We've got some really cool. We got a whole PYT dashboard coming in with some cool stuff from Quick Strike and other people in the industry. But for today, we just have these quant stats. And look at if we gap down, the historical odds are showing a 51.16 probability of closing above the open at the end of the day. So it's a low probability. I mean, it's basically 50-50, and it's not a very high profit factor. Now, when I come into the day and I see that we gap down and I see that the probability is low that we're going to go up and potentially this is a gap and go stat, right away in my mind, I'm like, okay, probably want to sell rallies in this thing. It's just unlikely for, a strong gap lower and reverse to fill the gap type day. Okay, so you just keep it in mind, right? Because it's a probability with 10 years of statistics. Now I'm actually going to go and I'm going to look at gold. And I didn't go to that for gold today because I don't have any trades for gold and oil, but I'm going to explain why. And I'm going to show you what I'm looking at in gold. So I'm going to give you some color here. And I'm going to explain why I'm not taking any trades. And I'm going to show you what my outlook is. First thing I do is I pull up a 60-minute chart, a 1-hour chart. I'm here on TradingView, which you actually can connect your Tradeovate account directly to, which is pretty cool. And what I look at here is the 60-minute Bollinger Bands. And these Bollinger Bands are 20-period, 3 standard deviation. Okay, 20-period, 3 standard deviation. I'll just show you that on here. Okay. And I like this because it works. It gives me a 3 standard deviation look what's happening within the market. And what I always look for in any sort of extreme volatility, really in any volatile conditions, is how are the Bollinger Bands looking when we're moving up or when we're moving down? And I'm going to take my drawing tool and I'm going to explain why. So I look at these previous peaks as resistance or support. Okay. There you have them right there. Right. Okay. And I have those there because to me, those are unfinished business areas. And when I see moves like I saw here with this move straight up like this, where it blew through this resistance and the top Bollinger Band started accelerating above it, but yet the top Bollinger Band didn't exceed the price. So this move was like a 4 or 5 standard deviation move, which is a really big move. And a lot of time highs and lows are made with those 4 or 5 standard deviation moves. And then you have the Bollinger Bands coming back in and basically boxing us in, which tells me at this, and when I say by boxing us in, I mean volatility is coming in with the mouth. The volatility isn't expanding. And so what it tells me is that anytime we get up near a 3 standard deviation move, or we get up into this area right here at the top Bollinger Band and that peak, that is an area that's going to probably provide some decent resistance. And it's because you have a 4 or 5 standard deviation move piercing the Bollinger Band. And now the volatility of a 3 standard deviation move is only telling you that this is about as far as we could go temporarily. And so to me, gold is just boxed in right now, I think right in between the Bollinger Bands. And so who knows what can happen here? I mean, this thing could go up to 70, down to 30, back up to 70. But the only way that I think you eventually look for this move start to break out again is this top Bollinger Band has to start expanding out, and this bottom one has to start expanding out. Similar to what we saw here, in here, here, in here. And so for now, gold, as much as everybody looks at it and thinks it's very bullish, with the Bollinger Bands pointing in, we're boxed in, which means I have no edge of direction. We're testing this area. We're going to continue to test it. And so that's what I see here in gold. I think that it's just wait and see. Don't be too anxious with it. Crude oil next. It's very interesting because with crude oil, look at, you saw another 4 or 5 standard deviation move outside of Bollinger Bands. It's one with crude oil, one with gold. And anytime I see this, and you could go back historically and look at crude and gold and any of these markets, and you look at 3 standard deviation Bollinger Bands, and you can see how busy we've been and just shrinking the chart here. There's almost no violations of them. It's hard to get outside of a 3 standard deviation move. So when you see that, you always take note and you watch what the Bollinger Bands do following it. Because in this situation, which is very different than the way gold looks, is that what happened was crude was really setting up for, in this area, when we remember I talked about those peaks as being support or resistance. It actually was really good support initially, and we saw a little bit of a bounce. But once it violated it, bang! And look at where the Bollinger Band was going. It was going straight down, and now it's come back up, right? And now we're in this similar situation. Now, when you see Bollinger Bands do this after a 4 or 5 standard deviation move, you have no edge. Right now we are just boxed in, and it just tells me at this point that you can see this go on for days or weeks in a really volatile time between maybe 66, 67, and 70, which is really not that big of a range, but the market's digesting it. When do I change my thoughts? Expanding out. Once those Bollinger Bands start to do that, because then it starts predicting that we might be expanding volatility. And so right now we're just in this time where we're going to build up, and we'll see what happens from here. No edge intraday. Now, I actually want to go to the S&P where I have some trades on, and I want to go over that. So another violation of the Bollinger Band peak, which is pretty interesting because it actually, in this situation back here, it pretty much went right to it. And look at that move we had off of it, right? We had that big move off of it. But then the bottom Bollinger Band started to go down and expanded outside that peak. And look at what happened when we started to get down and break that low. You had that volatility come in and just kind of really search for this low. And what's happening now is that the Bollinger Bands are coming in. They're not that sideways look. So what you have to watch for right now, which I'm looking at, is how does this Bollinger Band stay continually hour after hour? If this Bollinger Band starts to get flat or open up like this again, this S&P could continue to look to push lower. And right now, I'm not really thoroughly convinced that because the Bollinger Band peaks are coming in, that they're done pushing down to the downside. The S&P, anytime it's hugging down like this near these bottom Bollinger Bands after a violation of that, I'm very skeptical of stepping in and buying anything, because it's telling me that right now it's trying to show that maybe we're going to get boxed in, but we're staying at the bottom part of the ranges, and rallies are still met with sellers. Let's go back to what we saw with the InvestiQuant stats. Everything was weak, right? It was telling us to probably sell rallies on a day like today. So now what I'm going to do is I'm going to go to a 3-minute chart, and I do this for every market every single day. I'm going to take an auto-anchored VWAP. I'm going to go to the 9:30 Eastern open. Okay, I'm going to clip it on there. I'm going to use my standard deviation bands. It's 1, 2, and 3 standard deviation bands around the auto-anchored VWAP. I keep up the 3-minute Bollinger Bands because I kind of want to see where those are. Then I'm going to go and I'm going to take my horizontal line and I'm going to box out the 3-minute high and the 3-minute low from the opening print. And the reason why I do that is because to me, that's the 3-minute opening range. My brother Pax looks at the 30 seconds. Some people look at 30-minute like horse. And, to each his own. I like 3 minutes because I do. I don't know what to say. I don't have an actual specific reason except besides the fact that the 3-minute bar to me is really, I look at it as, I'll tell you a quick story as to why I pick 3 minutes. It's like I look at it as 3 minutes represents like the opening 3 minutes of like a boxing match. And if you look at the 3 minutes of a boxing match, that's usually the time, especially in the Mike Tyson days, where like the guy was most susceptible to getting knocked out. And if they made it through the first few minutes with him, then they typically made it throughout the day. So they felt the punches, they felt them come in, and they were feeling each other out. And from that point, we would expand beyond it with the VWAP, and it would tell me who won that opening 3 minutes. So it gives me enough information instead of being too short term with like a 30-second or a 1 minute. And it gives me just enough to see those opening orders, because usually opening orders in the pit would take 1 to 3 minutes, usually to fill. And so that's why I like it. And I've been using it for a long time. And then what I'll do is I'll go and I'll look at once the market violates, or once the opening 3-minute anchored VWAP violates the bottom of opening range. So right here at this point, we got below the 3-minute low and we started to head lower. Okay. At that point right there, I look to myself and I say, okay, number one, I only want to sell rallies. So there's a couple ways I'll approach it. One is I'll start look to sell rallies and I'll put stop above the 1 standard deviation. So this is where I would use micros or E-minis for this. And the next thing I'll do is I'll look at the event contracts and I'll say, okay, where can I get in a little bit out of the money and potentially play for a lower move? Out of the money would be, and let's actually pull up the PYT dashboard here. And so this is the only position I have on right now. So the out of the money for the ES is going to come in at that time was around 40.80 no's, which is puts, right? So at that point, they were trading 875 and I bought 30 of them, okay? And that's I'm risking what 260, 250, I think exactly. Somebody will correct me if I'm wrong on my math, but I think that's what it is. So I'm risking 10 ticks, whatever, right? And I look at that and say, I am going to put that on, and I'm with my $262 worth of risk, I'm going to make somewhere around, what is it, $400, right? So it's good risk reward for me because I'm going to be playing the short side anyway. And this is a position that it'll just keep me in on the short side. I don't have to worry about anything else. You can see that I'm trading right here on the dome. And the way that you do this, we have a PYT dashboard you can download from us. And you can pick any one of these strikes. You right click. Actually, let's pull up the 4090. Well, no, not the 4090s. Let's pull up the 4070s. And we can drag and drop them like that. And then there they are. And so to me, what I like about let's go back to these 4080s and why I have this position on is because quant stats are bearish. The 60-minute is not convincing me that we found a bottom. I want to be short. I've been short a bunch of times in and out already today. And when I go back to the chart, I was actually short a little bit in here, short a little bit in here, trailed stops, got back out, got back in. Just one of those things I'm trying to stay short. And it's really been a choppy day. But when you have the event contracts, it just keeps me directional. And I'm almost trading around that core position. And when I look at it, really, anytime when I got back to 4090, actually, because that's where that initial point was, as I almost call this back at the scene of the crime. If we get back up to 4090, I actually tried to buy some Let's go back to the PYT dashboard, 4090s, but it never got to $10 or lower because I don't like to pay more than $10 on any of these. I like to buy the out of the monies. And at any point in time, if I want, I could just start covering these and I could start trailing out of them. You could trade them right here in the dome. So it's like, you can work the offer and I'll just, show you. I'll sell a five. I don't want to get out of five, but I'll sell five. I just sold five there. I'm going to show you now my position's long 25. But I did that just to show you on how they work on the depth of market. And you can trade them. Of course, I'm going to sell them. They're going to bid them on me. But I like these for directional moves, period. Right? If I think today is going to be a trend down day, and I'm going to sit in there, and I've already been short like 4 different times in the S&P where I was short out and out. This allows me to stay directional, and that's the only time I've covered any of that position, just to show you guys there on the depth of market, to show you that you can trade it. And so when you look at an event contract and you look at, I think, daily options in general, I will always say it always comes down to the situation, right? When you have a directional look like I had here in the S&P today, I personally wanted to be short, so I was using S&Ps, and I even used some micros in some instances because I wanted to scale. And I was continuing to covering because I'm using the standard deviation lines as guides. You could see when they can't get below the 2 standard deviation and the 1 standard deviation, I use those as cover zones. I like to stay with the event contracts because it allows me to buy something a little bit out of the money. It's a fixed risk, and I can stay short the entire day. Now, if I start to see the 60-minute, right, where I start to look at it and go, wow, this starts to all of a sudden, maybe this starts to get flat or starts to push down. These are the types of times where I might step in, okay, and I'll look for some more extremes. I'll give you an example. Like yesterday, when we were breaking, I was buying them way out of the money. And they didn't work, they lost. But I was looking at the Bollinger Band peaks and saying, could we rip all the way down to 40.80? But I was buying them for $3-4. And because I have that as a peak, when you get this type of volatility, I look at these peaks, and those peaks are great areas. So, like, to me, the most we probably go down today is like 56. So if I continue, I look at the 60s. Actually, let's go and look at those right now. Let's look at the 40 60s. See, actually, they're actually not priced. I think they're priced a little high. I think, well, maybe not necessarily high for where we are now. I think we're down to 70 now, right? In the S&P, yeah, 72. But if we start to get a rally and fail at 80 again, I might step in and buy these. You could see people were buying them between 3.5 and 8.25. And so people were trading them in there. And that's what I look for. I like those peaks because that's where you could potentially get them cheap. And if we get that follow through, those zinger trades, that's what I like them for. Because let's face it, I don't care who you are. It's going to be hard to stay short here today. You've already gotten 10, 20 handle rallies, which, like I said, as I'm trailing stops, I'm getting out of it. But the event contracts, since that morning position that I put in, let's go back to the 3-minute where I had it boxed out. I've been in since there. And so to me, it allows me to stay directional. And of course, I've traded a whole bunch inside of here. But at the end of the day, I've already been out and I'm flat right now, right? Because as they started to get above 1 standard deviation moves and above the VWAP, I tend to wait a little bit. And so here we are. And so I think that this is a time and a place where you can use event contracts. It makes sense to me during these times. Every tool that we have and everything that we will always do as traders is just an additional thing we put in our arsenal. And it comes down to what situations make the most sense. And also, one final thing is I will leave you. Look at this 54, 55 in the Bollinger Band peaks, and that's a 3 standard deviation. Like, I don't think if we blip down, the 55 area is even an area where if we got down here and blip below it, I might step in and buy some yeses because these are the same peaks on the 3-minute as they are in the 60-minute. So maybe I buy some out of the money yeses for a bounce versus stepping in and trying to be long this stuff or short it, where you might have a whole lot that happens in between. And of course, there's a place for that as well. So to me, this is the way I use them. Hopefully showing you guys how I use Bollinger Bands. Auto anchored VWAP gives you a roadmap and just a way to look at the market from my perspective. That's all I've got for you guys today. Once again, let's see. I see a bunch of these questions in here, but hopefully it helped all of you guys. I got the chat off to the right. I've got my golf shirt on. I am going to get out and play a little bit of golf this afternoon. Got to keep the glow going, everybody. I'm headed to Chicago next week. It's my last time to play this afternoon. So I wish you guys a great trading of the rest of the afternoon. It's also a good time where I can leave because I got event contracts on and my stop is basically baked in. So that does it for me today. I wish you guys all the best and trade well the rest of the day, everybody. I will see you guys not next week, but in 2 weeks. See ya.